Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for November 12th, 2017. Market breadth with this past week's market fractional decline. Our bull-bear point and figure ratio at 1.21 declined from 1.52 last week, yet remains within bullish territory. The total count of securities in bullish or bearish patterns decreased fractionally to 3,188. The count of bearish stocks decreased 13%, while the count of stocks in bullish patterns decreased 10%. The Pirls PNF Market Breadth Summary Chart shows us a market now 11 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary free of charge via email, simply enter your name and your email address in the spaces required and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 166 points for the 12th decline in 29 weeks. At a positive 140.70 points, it has fallen below the July 2017 top and continues below remaining tops in the last 30 months and continues above all 5 bottoms in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum. The CCI 20 daily in a Woody's uptrend is now at 70.98, down from a positive 159.19 last week. At Thursday 10/26 close, the CCI 20 daily was within the plus or minus 50 range for a valid zero-line reject long entry signal at Friday 10/27 close. The CCI 20 fell below plus 100 at Thursday 11/9 close, so we exit the trade. The result of this trade simulation was a gain of 42.62 points on the Nasdaq, or $2.20 per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 80 weeks ago, while the daily CCI 20 began a Woody's uptrend 9 weeks ago. The CCI 20 weekly, at a positive 152.73, fell from a positive 175.51 last week after forming a zero-line reject long entry signal for Tuesday 9/5 open. Our rule is to stay in the trade until the CCI 20 drops below plus 100. We will continue to follow the result of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech, oil, oil services, and REITs on top. KBW Bank and gold and silver on the bottom. Bullish, REITs has entered the top 5. Gold and silver continues in the bottom 5. Computer hardware has left the bottom 5. Bearish, KBW Bank has entered the bottom 5. Oil and oil services has entered the top 5. Semis, Comp Tech, and S&P Retail have left the top 5. Focus this week from www.peakprosperity.com. If the Saudi Arabia situation doesn't worry you, you're not paying attention. We won't attempt to boil down this highly significant geopolitical article, but merely explain its scope and point out that the international oil trade landscape is rapidly changing. Both parts of this 2-part article are well worth reading so as to be able to navigate the coming turbulent waters. The following key points are listed in the beginning of the article. So much is currently in flux, especially in Saudi Arabia, that nearly anything can happen next, which is precisely why this volatile situation should command our focused attention at this time. The main elements currently in play are these: a sudden and intense purging of powerful Saudi insiders, arrests, deaths, and asset seizures. Huge changes in domestic policy and strategy. A shift away from the U.S. in all respects, politically, financially, and militarily. Deepening ties to China. A surprising turn toward Russia, economically and militarily. Increasing cooperation and alignment with Israel. The enemy of my enemy is my friend. Taken together, this is tectonic change happening at blazing speed. Article Part 1 subheadings are the following: a quick primer on Saudi history and the petrodollar. Then things started to break down from 2015 on. Pivot to China by the Saudis. The Part 2 can only be read in full with a Peak Prosperity account, but the executive summary is as follows. China's imminent peak in oil production. The final key player in this story, Russia. How to prepare before oil becomes a lot more expensive. What to prepare for? Higher prices for everything real, lower prices for everything paper, and more wars. Thank you for watching this week's Sand to Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl. www.s2pmarketsignal.com. Hoping that you have been enjoying a peaceful and pleasant weekend, that you're looking forward to a prosperous and productive week coming up, and wishing you true success.